So three of us, I'm going to talk about what happened in the last year and a half. Daniel's going to talk about what's going on, the trends, what we're doing, looking at for portfolios, the economy and everything. And Jamie's going to talk about preparing your life for an emergency. Because after COVID, we found out that a lot of people, not necessarily you folks in this room, were not prepared for a pandemic. So we're all running out buying toilet paper and couldn't get to banks because they were closed and everything else. So Jamie will talk about that. So, this reminds me. So on your table, you have a notepad for your own personal notes. There is a survey, so if there's anything, several people have already asked about something like their account or whatever. Just write it down. If you put your name, write it down like somebody says, I have an account that's still open with $1.05 in it. Just write that down, then when we go through, we can just follow up. If you have questions about anything on estate planning, taxes, investments, fill it out. We can come and see you. We don't open it up for question and answer because there's 55 people in here and about 120 different questions. So we're not going to spend all afternoon answering other people's questions. We'd rather meet with you one-on-one, and it's very private as well. Okay, so so we're going to talk about the state of El Dorado Financial. We've had a really amazing last 2 years in our business. We are currently now managing $140 million, up from about $70 million 3 years ago. So huge increases, and you'll find out why we have so many more people here. And then we have 327 clients. I want to share with you too that we don't have a desire to be a big major firm like Wall Street. We're here in Montrose. We want a quality of life. We want to be able to spend the time with you folks and helping you out. So we really focus on quality as opposed to quantity. So there will be a time that we may not accept clients. I don't know when that will be, more up to Jamie, but we'll just see when we get to a level. Our office is really tight right now. I had to take my office, cut it in half, give Janet an office that's 4 feet wide by about 10 feet. So it's about the size of your closet. She's happy there. She has a stand-up desk, no room for a chair in there, and she does all the trading and all that other work. And so, so we really don't have any more room for too many more people here. We have 6 employees. So we'll share with you. There's me and my wife, Janet. You know her and me, and then Jamie. If everybody knows Jamie, she's my daughter. She came in 2 years ago, right before COVID in November of 2019. She worked at Vanguard for about 7 years. She was in management. So when she came in the practice, she really understood a lot about management, people, HR, the whole operation of money management firms, got an experience with the big firms. Daniel worked at Charles Schwab on the advanced trading desk. And so he has that knowledge on buying, selling, and all that stuff. Technology's changed a lot, and that's how we're able to manage so much more money by using software that's able to assist us. Though, don't get confused, software is great, but you still need the human element. Some computer can tell you all kinds of wonderful things, but it takes a human being to actually say what's really happening and do we actually believe this or not. Okay, we have new faces too. So there's 6 of us, so I just mentioned 4 of us. So we have Charity. Is Charity still here? There, step up. Everybody know Charity? Okay, Charity is our front office. She's our office manager, so if you need anything, pretty much when you call the office, she's the first one to answer the phone mostly. If you need money in or putting money in or money out, that's pretty much what Charity's experience is. She worked at Alpine Bank and several other credit unions before coming here, so she knows money and how that flows in and out. If you're opening accounts, she'll do that. If you get confused on how to get into your online account with TD Ameritrade or Morningstar, she'll help you. The next one is Holly, and Holly is not here today, but we just hired her 2 weeks ago, and she will be backing up Janet and Daniel mostly. Now she'll be backing up Charity too when she's gone and busy, but she'll be helping Janet with the RMDs and the qualified charitable distributions, the rebalancing of portfolios as well. So she's our sixth person here in the office, and unfortunately she's not here today to meet you, but when you come in the office, she's at Janet's old desk, because Janet's in the closet, and so Charity's over at Janet's desk. So if you come in and you go, that's not Janet's, and people moved around. We had to do a little bit of musical chairs. Okay, everybody's probably has heard that there's a merger going on. When Daniel and Jamie came, they came in November of 2019. A week after Daniel came on board, we're in the office and we get notice that Charles Schwab is merging with TD Ameritrade. So he calls his old boss and says, what happened? You guys missed me so much that you're going to just buy out our company, so I'm back with you guys. So there is a merger with that will be happening. It's a 3-year process, so it's going to take a long time. I want to let you know, don't panic and don't worry. Janet and I have been through numerous mergers. We started back in 1998 with Jack White, and Jack White then merged with Waterhouse, and Waterhouse then merged with Toronto Dominion Bank, which was TD Waterhouse, and then TD Waterhouse merged with Ameritrade, and now it's TD Ameritrade. So we've been through 4 of these. We've had some, we've learned a lot of things, and so we're going about very careful. Charles Schwab is not a dumb company. It's not underfunded. They're not a bunch of yahoos. They know what they're doing. They're going about this very slowly, and they're starting to merge. They're listening to us advisors and clients like you saying what they like about Ameritrade, and they're cherry-picking the best parts of Ameritrade and keeping that and throwing away the other stuff that they're not very good at. And so be patient. We'll keep you informed. We don't expect a lot of major changes except for generally the logo on your statements. They've already switched over the money market funds. You probably didn't even know that, but all your money markets now are no longer Ameritrade. They are Schwab, and because Schwab has its own banking division. So we'll keep you informed. So don't panic. It's not a major problem. And if for some reason that Schwab really makes a major mistake and we don't like it, we can always go someplace else, because we don't work for them, but we'd rather stay where we're at because they are an amazing company and we have some amazing products to keep you going. Okay, so what happened the last time we met, last year and a half? What happened? Is that what happened? Is that how you feel? You know, screaming. So we had chaos, all kinds of stuff, right? I mean, if you remember, we talked a little bit about this COVID, or we didn't even have the name for it yet. It was just some kind of virus. I don't know, it's called coronavirus or whatever. And we knew something going on, and we heard that there was some in the news, but it was so like back page of the newspaper that no one even really knew much about it. And then after that, Daniel and I went to a conference, and a lot of advisors were like, oh, this is just another thing like MERS and SARS and all the other issues going on. And then it exploded into being what it is now. So a lot of things has happened. Stock markets crashed. Businesses closed down. We didn't even know where we'd be eating or anything like that. And this is what happened. So the markets were going up in January, and then end of February just dropped almost like a rock. Okay? Everybody in this room that I know of did not panic, and you stayed the course. And you held on, and you survived, and you made it. You look back and you go, it's not so bad. It was very, very, very painful here. I mean, we had huge drops in the markets. We had, here is the stock market since 1875 or something. These are the largest point losses, and these in red are the ones from the COVID. So 13 out of 20 point drops happened last year. These are 13 of the biggest point drops happened last year. So that shows how devastating that is. We had almost one that was almost 3,000 points, and then one that was 2,300 and so on. And so, but if you really look at the data, you find out that it's not quite as bad if you look at the largest percentage loss. Out of the largest percentage loss in the 20 largest ones, the largest one was 1987. You remember that, when they had the hedge funds, and they told, and the newspapers, the newsletters said sell, and everybody sold on that day back in 1987. And then we had the 1929 crash. So we had, last year was 3 days. We had one that was in March 16th, March 12th, and March 9th. So percentage-wise, really wasn't that bad in the whole scheme of things. It felt bad, and it was very fast. I mean, it just came in, and it just went down and down. It was some days down 2,000 points and up 2,000 the next day. So with this correction, we all felt this, and all of us felt sick to our stomachs. And what do? Mostly everybody held on. Unfortunately, we had like 2 clients that just could not handle it. They were in tears and just couldn't deal with that. And so they just said, get me out of the market. And they made a major mistake because look what's happened since. You got to be patient. Now, did I know, or Daniel know, or anybody know where this is going to go? Almost all analysts said it's going to be an L-shaped situation or a W down here, all kinds of predictions. Hardly anybody predicted this recovery. Hardly anybody. We really can't find any analysts in Wall Street, out of thousands of them, predicted this strong of a recovery. And that's why it's important to have advisors that have been through this. I've been through 7 recessions and 5 major corrections, and I'm not saying I'm always right, but I've been through it and I know how to get through it. And by staying the course, you all did relatively well. So kudos to you all. Give yourself a pat on the back. Oops, did I? Okay. Okay, and recovering. So this is showing us a study on how investors do. In the last year, they've gone up 7%. In the last 3 years, about 3%. They're on the blue. These are regular investors. The orange area is, if you use an advisor, what are the market returns of those accounts? And they generally, it's called an alpha. We're gaining 3 to 5% each year by following our advice. Because if you were all managing your own money and the markets crashed like that, what would most of you have done? You would probably have, because you're in control, right? You're going, and you would have just sold. Because we got phone calls from a lot of you and going, what are you going to do? And I said, we're going to hang on. And you go, okay, I trust you, you know, right? Just like, you know, like jump, you know, mom, you know, your mom's down there and she's going to catch you, you know. And so you're like, okay, I hope Jim's right. Well, we were relatively. And so, but by using an advisor, we are able to give you alpha. And so people say, well, how do you earn your money on what you do? This is a big part of it, what we do here, by giving you the right advice. Are we right all the time? No. If we can be 70% right, we are geniuses. But what we're trying to do is, no, seriously, I mean, it's not like, you know, you can't hit 100% or whatever. So that's why you're working with us, because we can provide you what we call alpha, get you a little bit better return than the average investor. Because you hear it all the time. People say, I manage my own money. Well, how many people sold at the bottom? Obviously, a lot of people, because the market goes by buyers and sellers, and that's why it's down. Okay. Oops. Whoa, boy, Daniel. And then the last thing that happened is inflation. Daniel's going to talk more about it, but we've had huge amounts of inflation, and we're running at 5% now, is what they say. Is that a true number? Not really. I think it's close to 10 to maybe 15% of real inflation. They play with the numbers and they cook the books using deflator numbers and core inflation and chained inflation numbers, and they're now saying we're at 5.3%. So for everybody that gets Social Security, you're getting a 5% increase. But I tell you, take that money and go spend it at the grocery stores and car dealerships and any place else you want to go to. And inflation is just outrageous. I was just talking to a lady at dinner last night, and she was saying her daughter's getting married. They can't find a caterer for next year. no one will quote a food price because they have not an idea. They don't know. They said, so I said, well, can they just give you a range between $15 and $50 a person per plate? They don't even know because the food prices are going astronomical. Have you noticed if you go out to eat, the menus have all changed all the time. They're changing every week practically because they can't get the food. So anyway, so that was my talk. Who is that? Go, charge. Okay, we're going to have Daniel talk, and he's going to bring us up to date on what we're doing and what we're planning on doing.
All righty, how you guys doing? Good, good. All right, just in case you guys were wondering if it's really me, I wore the same suit jacket and shirt that's in the picture. Okay. I'm not going to talk too much about the stock market. There it is, been there, done that. What I do want to do is have a very bleak conversation. I'm not trying to scare you. I'm not trying to freak you out. What I'm genuinely trying to do is help prepare you with what we think is what's going to be coming down the pike. Remember when you're 16 years old, you just got your driver's license, boy, you're like white knuckling that steering wheel. This is just me helping you understand what we're seeing, and when you understand what we're seeing, you kind of get a better idea of what we could potentially go through and why we're making the decisions why we're making. So I want to start off by saying COVID-19 was not the only black swan event we went through last year. Black swan is a technical term we like to use to describe an event that was completely unprecedented, completely no one saw coming, 9/11, prime example. So the virus itself was not the only event. It was the government, monetary, and fiscal policy that followed it. That's not supposed to be a criticism of any administration. Objectively speaking, to start with the lockdowns, for the first time in our economic history, at least to my recollection, we literally Spartan kicked the brake pedal on the world's largest economy. We brought this whole thing to a screeching halt, and that is very evident by this very sharp 35% drop in the S&P 500 index. I've talked about this before. After the 2008 mortgage crash, the S&P dropped about 55% in 17 months. This did 2/3 of that in 24 trading days. This is really abnormal, very steep. If I didn't know any better, I said this was the side view of the Red Mountain Pass, okay? Very, very sharp decline. Okay, so one of the first things we saw during the early days of the pandemic was basically an expansion on the Federal Reserve's balance sheet. Now, I don't have a lot of time to explain what this is, how this works, the mechanics, but every time you see Federal Reserve, which is our central bank, and balance sheet in the exact same sentence, I want your mind to go to the money printer. And as the old saying goes, money printer go burr. So post-2008, we were sitting pretty at about a $4 trillion balance sheet. We started to taper off. Everything was starting to go down. Beginning of the pandemic, we saw a very sharp incline, and it just kept going up and up and up. Right now, the Federal Reserve's balance sheet is at about $8.4 trillion. So in the industry, basically the joke is our central bank took two bazookas, one in both hands, stuffed them with cash, and just blasted our economy with all this liquidity. So you couple that with very low interest rates. If anyone's getting rich off of CDs, please send them my way. And the other thing that we've been seeing since the pandemic was the fiscal policy. Now, assuming Congress passes a $3.5 trillion infrastructure bill, since the start of the pandemic, between the Trump administration and the Biden administration, the government would have spent $6 trillion. Now, adjusted for inflation, and I like to give analogies and give you some perspective because, $6 trillion, I mean, that's 12 zeros right there. $6 trillion adjusted for inflation is more money than what we spent on the Revolutionary War, the Civil War, World War I, World War II, the Louisiana Purchase, Transcontinental Railroad, the interstate highway system, and the moon landing combined. So very early on, we were very concerned about inflation. For those of us in the room that are drawing on Social Security benefits, Every year, your benefits are adjusted for inflation. It's called COLA. It is our professional opinion that your adjustment in Social Security is nowhere near enough what's actually going to be paying in the rest of the economy. So, keep going. So another concern that we have, especially more locally here in Montrose, if you go to the Federal Deposit Insurance Corporation's website and you punch in our zip code, we're sitting at about a $1.2 billion inside the banks. That's $1.2 billion that's getting chewed up by inflation. So, and then also the White House recently announced that it's doubling its forecast for inflation. For months they've been saying that, oh yeah, inflation, no, it won't be a problem. And then, yeah, and then our Federal Reserve, our central bank in New York, said that the median inflation rate for the next 3 to 4 years is going to be about 4%. But again, they finagle the numbers. Okay, so how many of us have never blown up air in a balloon with an air pump before? Okay, there we go. So you blow air into a balloon, the balloon expands. Okay, this is the analogy I'm going to use to help you kind of get a grasp of what we're seeing. Now, one of the things that physics teaches us is that when the temperature is really cold, the air molecules inside the balloon, they're not moving around. So you can pump infinite amounts of air into your balloon, it's never going to expand. Now, in the opposite situation, dang it, here we go. In the opposite situation, when the temperature around the balloon is really warm or really hot, those air molecules, they're bouncing all over the place, which causes the balloon to expand exponentially. So the analogy is that the balloon is our economy. The air pump is basically the money printer, you know, our government spending, our Federal Reserve's balance sheet right there. Come on. Now the change in temperature, this is the tricky part, is what's known as the velocity of money. Okay, very expensive economic term. This is what it is in a nutshell. Velocity of money measures how often a single dollar exchanges hands throughout the economy. Okay, I go to work, I earn a paycheck, I go to Crash Burger, I get a hamburger, Crash Burger pays the meat supplier pays the meat processor pays the rancher pays for the feed and the water, so on and so forth. If I'm the only one in town that's doing this, the economy is really cold. But you, me, and everyone else in this room starts doing the exact same thing, everything starts to heat up. All that money's moving around. Remember, those air molecules, they're bouncing all over the place. So this is essentially what's been happening. So during COVID, when we were all locked down, we couldn't travel anywhere. We couldn't go we couldn't spend money. I mean, gasoline, crude oil just dropped through the Earth's crust. I mean, holy crap, So we weren't able to act, be active in our economy. So we saw a lot of deflation. We saw a lot of contraction. But at the same time, government and central bank was just pumping just an ungodly sum of money into our economy. Come on. Okay. Now that we have a vaccine, now that people are comfortable about going out and about, we're traveling more, we're spending more money. I think it was Keith Caddy, who's one of our county commissioners. He said, well, once you let the herd out, it's impossible to wrangle them back in. We're starting to see this money start to float around everywhere, and everyone's spending their dollars, and we're starting to see the economy, with the inflation starting to peak. Well, my biggest concern... So that's essentially what I'm worried about, is we're pushing Keynesian economics to a level that we've never seen before. We're just dumping so much money into our economy that we're already starting to see the effects now that everyone's kind of going out and about and spending. Now, this is the part where I become brutally honest. Good old John Travolta. I don't know if it's going to be like the 1970s. If you remember, Richard Nixon took us off the gold standard, the Ford years, the Carter years, we had high inflation, high unemployment. Why is it that we can never bring back disco? Why is it always inflation and gas shortages? I'm just saying. Stock market kind of did this, what we call stagnation, where it didn't really go up, like during that decade, it didn't really go up, didn't really go down. It kind of was a little bit flat a little bit. So that was the 1970s. I don't know if it's going to be like that. If you remember Weimar Republic, post-World War I Germany, country had a lot of debt. They printed money out of thin air. They printed so much money that it basically became useless. I don't know if it's going to be like that. I don't think it's going to be that bad, but again, it's happened before. So we printed a lot of money into the economy. You know, we don't know exactly what the future is going to hold. However, one other sidestep, and we're already starting to see this inflation, especially in real estate. Come on. Okay. So most recent numbers I have, according to Keller Williams, the median home price in Montrose it was about $400,000. Now, because we're going into winter months, things are starting to normalize. We're dipped down to about $390,000. Here we go. Okay, and then our average sales to list price. Okay, this is what is basically like if I put a house on the sale or house for sale and I list it for like $400,000, more than likely I'm going to get that $400,000, not accounting for costs and stuff like that. It was at 100%, but now that we're going into the winter months, this is starting to dip down a little bit. So things like real estate, food is another factor. If you've been hearing about the Port of Los Angeles, SeaTac, a lot of the ports around the nation, there's literally like a line of like 60, 70 boats that are just sitting there twiddling their thumbs, just waiting to be unloaded. They can't unload the supply fast enough. So supply chain issues does play a factor, but I really want to focus more on the actual fundamental things like the money that's being injected into the economy. Things like real estate is a prime example. We're seeing that across the board in the United States. You know, where I'm from in Phoenix, Arizona, you know, I had a client just finished college. He went to Boise for work, and a one-bedroom, one-bath apartment in Boise, Idaho is like $1,700 a month. I mean, that's like about my mortgage. So it's across the board. Real estate's doing the same thing. We're going to see a lot of, I think we're going to see a lot of inflation. So now that we talked about inflation and now that I've scared you all half to death, what are we doing about it? Does that mean we need to sit idly by? No. Very early on, well, during the pandemic and when we saw all this monetary stimulus and stuff going on, we started incorporating what's called TIPS, or Treasury Inflation Protected Securities. These are special treasury bonds that pay you an interest based on inflation. I had a client sell some real estate, had nothing to do with it, was getting nothing at the banks. She just wanted something that's relatively low risk, not a lot of volatility, pays, better interest than the banks. I said, hey, we have these TIP funds, that's a potential option. She said, okay, let's put some money in there. And that was like in September of last year, so she made over 5% on her money already. So not saying that's going to be the norm or that's going to continue, but I'm just saying, past performance doesn't guarantee future results, but it kind of sheds light on the point I'm trying to make. So TIP funds are one potential option, or one thing that we're doing. Technology, okay. Here's a dangerous question. I'm going to be really dangerous for a second. How many of us in this room used Zoom or something like it before COVID-19? 1, 2, 3, 4, 5, 6. Okay. How many of you used Zoom at least once after, post COVID-19? There we are. There's all the hands in the room I want to see. Okay. Now, here, when you think about technology, I'm not just talking about Facebook or Amazon or, Google, or Apple. Those are great and all. What we're really focusing on is innovative technology. Technology that is really kind of disrupting the space now that we live in a post-COVID world. Zoom is a very classic example, and this is what I found very interesting. Zoom's user base went from 2 million to over 200 million in a span of 4 weeks, okay? One of the things I think goes completely unappreciated about COVID-19 is the fact that I don't think we've ever seen the largest forced adoption of technology in the history of ever, okay? We, seriously, 2 million to like 2/3 of the United States' population in that relatively short amount of time. And it's not just Zoom, it's companies like Robinhood, if you've heard about them, Coinbase, Tesla is a great example. We'll talk about Elon here in a little bit. Just remember, just innovative technologies, new emerging technology. So the technology explanation that I just gave is for, kind of us, the normal people. For those of us in the room that have a technology or computer science degree, two things: Moore's law and network effects. Moore's law, I think it's 2 years now, but every 2 years technology gets smaller and it gets cheaper. If you apply that concept to economics, that is a very deflationary, it's very deflationary. It's, that the technology is designed to go up in value. Network effects, Facebook, for example, is a prime example of a network effect. The more users that use Facebook, the more value Facebook gets. And so when you have more users using something like Zoom, 2 million to 200 million in a span of weeks, kind of makes my point. So network effects and Moore's law. Okay, come on. All right. Ground control to Major Tom. So space exploration is another area that we're looking into. Blue Origin by Jeff Bezos. I think it's Sir Richard Branson for Virgin Galactic. And then, of course, Elon's SpaceX. If you remember the moon landing, a lot of technology that we use today was all thanks to that one project. So that's just a potential area that we're looking to also. Ah, yes. Okay, here we go. This is the hardest slide of all. No, it's not really an experiment because I know the outcome. Okay, I don't have nearly enough time in the universe to go into what Bitcoin is, how it works, the technology behind it. For the sake of this conversation, we're going to put that aside right now. I should mention I have my certificate in blockchain and digital assets from the Digital Assets Council of Financial Professionals. If you have questions, you want to learn more, I am more than happy to share with you what's going on in this space, okay, and help you understand that. 90% of my job is education. I'm either educating myself or I'm educating my clients. Now, with all that being said, the one thing I want to say really quick, the fact that Bitcoin is trading above, right now, around $57,000, $58,000 a coin, right now, compared to where it started 2020 with, through a pandemic, through an election, through the monetary, the fiscal policy, okay, this is too big of an asset class to ignore. Now, you're probably thinking, okay, Daniel, that's great. It really doesn't tell me anything. Bitcoin's the 8th largest asset in the world by market cap right now. Wall Street is dumping a lot of money into this. Word chatter on the street is that we're finally going to get an actual legit Bitcoin exchange traded fund that's based on futures approved here sometime soon. So if you want to look, there's gold at 11 trillion, Apple stock at 2.3, Microsoft, Saudi Aramco, wonder what those guys do, all the way down. So creeping up on silver is Bitcoin. Another interesting thing that I learned last week is that Bank of America did a study, and they found that 14% of Americans right now own Bitcoin or digital assets. So with all that being said, another reason why I'm very bullish on this is because between now and the year 2055, thank you. Between now and 2055, there's an estimated $40 to $60 trillion of wealth being passed down from baby boomers and Gen Xers to millennials and Gen Z. Come on. Good chances that's going to go into Bitcoin. So, all right. So it talks about Bitcoin. Okay. Last thing on the investment side. I never realized how big of an issue water was until I moved to Colorado, which pretty much explains why when I tell people I'm from Phoenix, Arizona, I got all the evil stares in the world. It's okay, you guys can hate me, I can handle it. So, water. I heard about this thing called a drought, and the fact that we've been in a drought for quite a while. So I started looking into it. If you go to drought.gov, it will take you to the National Integrated Drought Information System, and this will give you a wonderful map of the United States, and it will show you what areas of the United States are getting hit most with the drought. California and Nevada are 100% in a drought right now. Jamie and I were just in Tacoma, Washington about 2 months ago, and there were stories about it got up to 100 degrees over there, or up there, and people died. You got those houses 100 years old, no insulation, no air conditioning. So then another thing too, here locally in the United States, oh, by the way, for those of us that like Napa Valley wine, more than likely you're gonna see the price of wine go up too. If this is the Bible Belt, this right here is the Corn Belt, and that's another cause for concern. How many of you guys like coffee? You can't live without coffee, okay. Drew, my buddy over here, has a shirt and it says, you know, I drink coffee for your protection. Oh, another thing. Here's Colorado. This is kind of where we're at. Here's the Front Range, as if we needed another reason to hate the Front Range. Okay, so in Brazil produces 1/3 of the world's coffee. Okay, that's quite a bit. They got hit with a drought this year, and to make matters worse, they got hit with a frost, which killed another good chunk of their crops. John Davina, John and Davina Pope that own San Juan Brews on Maine. I walked up to him and I said, "Hey, how much does it cost you per bag of coffee that you guys buy in bulk now versus when you first open?" And it goes, "Well, when we first opened, a bag of coffee for us would be about $30. Now it's $36. So more than likely, we're going to see coffee here go up pretty soon." Oh, another good question. How many of you know that we have a microchip shortage? Okay. Anyone bought a new car recently, huh? Here's the thing about the microchips. Taiwan Semiconductors in particular, they use water when they manufacture these microchips. They use water to cool down the process as well as clean off any debris or impurities. So Taiwan is going through a drought, and as far as making microchips is concerned, it uses a lot of water. So according to a 2019 report, oh, wrong slide, there we go, okay. So according to a 2019 report, Taiwan Semiconductors uses about 156,000 tons of water every single day to manufacture microchips. How many of you seen the water tower on top of Sunset Mesa? I was talking to one of the engineers. He said, okay, that's about, the water tower is about 3 million gallons of water, and it will provide water for the west half of Montrose for like 3 days. If you do the math and the conversion, 156,000 tons of water is enough water to fill that water tower 10 times over. So, and that's how much water that these guys are using. Water is becoming an interesting subject as it gets more scarce. I think we're going to see, going back to the technology portion, we're going to see a lot of innovation about water use and how, the environmental lobby is obviously going to get involved. Companies, I feel like, that are so dependent on water, most people will tell you, oh, it's probably a reason to not invest. Well, I would argue it gives them an incentive to innovate. And get into figuring out how much water, or, figure out how they can use less water to make microchips and stuff like that. And even stuff like, growing coffee. Okay, last couple things. Since the start of the pandemic, we've seen an uptick. Jamie, Jim, and I, we've seen an uptick in scare tactic marketing. You probably saw something in like a newspaper or something on a website that said something to the line of, the government's going to take my money out of my bank account. There is absolutely no logical reason why they should be taking money out of your bank account. I can't go to City Market and get food for my family without money. So you just basically decimate and crash the economy. 9 times out of 10, a lot of these marketing pieces they're just there to kind of freak you out so they can sell you on something. So hey, government's going to take money out of your bank account. You should buy gold. You know what I mean? Oh, and here's this perfect company that does it. So just be very mindful when you're reading articles like that. Just kind of a critical eye and be like, okay, why are they saying what they're saying? What is it? You gotta read between the lines. See if it says like sponsored content is a very clear indicator. You just want to be careful about what are they saying between the lines. Last thing that we're monitoring, there's something weird going on you probably got an email from your bank saying that the government or the IRS is going to be monitoring bank accounts with $600 or more in the money flow there. It hasn't gone through. We're keeping an eye on it. I'm working with the Montrose Business Alliance. I'm working with those guys to kind of really look at what the impact of doing something like this is. It hasn't gone through yet. It's just something that Elizabeth Warren and even Janet Yellen, our Treasury Secretary, is proposing. So not a lot, nothing new so far. They're still talking about it. Congress is going to do what Congress does best and try to, figure out a compromise. So enough from me. Jamie, you good? You got to unmute yourself. One click. Oh, hold on. This might be a good time to go grab popcorn. Talk.
Hello, hello. Oh, good. Okay. Kind of the clicker.
Here's the clicker
Which one's the?
to go forward.
Okay.
Laser.
Just figured I'd ask before I got up here on how this little thingy goes. So I'm Jamie Carnes, as Jim already said, and so you got to hear Jim kind of talk about what's going on with our business, what happened last year. You just heard Daniel talk through economic trends, what are we looking at, and something I just want to kind of reiterate to you. Yes, he wanted to share with you what we're looking at, what investments might be things that go in your portfolio, but don't stress. That's why we're here. We're here to help you manage that. We're here to help keep an eye on all of these things. So we're just looking at all of those potential investments and keeping an eye on what's going on with the economy, what's going on politically. So just wanted to share that with you. So don't stress. Squeeze your squeezy man that says don't stress. Calm down. But now here I am here. It's a little bit more practical. They were talking about the economy. Now I want to say, what can you do? What are some things you can do? So COVID was a prime example of an emergency that kind of came up. Nobody saw it coming. So how do you prepare for an emergency? Having a plan is key in making sure you can get through the emergency without being stressed out. So what are some ways that you can prepare for an emergency? The first one we talk about all the time, so I won't spend too much time on it, but do you have an emergency fund? And when I say emergency fund, I mean some form of savings in the bank account, something super liquid. Could be cash at home, a little bit of that's good to have, but just do you have some money hidden away that you can use if your car goes out? If something happens at your house, maybe you need a new roof with all the rain that's coming. You have a health thing pop up that you need to pay for. Maybe you're helping out a family member that really needs some money. So make sure that you have some kind of emergency fund. Normally we say a good rule of thumb is 3 to 6 months of expenses. However, if you want to talk through the nitty-gritty, what's good for me, feel free to talk to one of us and we can help you hone in what's that amount. The next thing is, how are you going to pay for that emergency? So some of that could be the cash that you have on hand, but if it's something that's a little bit bigger of an expense, like you get in a car accident and it's totaled, do you have good car insurance for that? If you're going to the hospital, how does your health insurance cover that? If you need to maybe go into a long-term care facility after the hospital stay, do you have insurance for that or not? If not, how are you going to pay for it? So that's just a thing to think through. The next one, what does your care plan look like if you're going into a facility or you have some kind of health scare, or what does that, bend it? Oh, sorry guys, I'm trying to blow you out here. Is that good? Okay, thank you. So what does your care plan look like for taking care of yourself or your spouse? And then finally, do you have a decision maker in place? If something crazy happens and you're not able to make a decision, like you're in a coma, or maybe something crazy is happening mentally, you're like, I can't deal with this, or maybe you're traveling outside the country and you get stuck, do you have somebody that can help take care of what needs to happen? Maybe? Okay. So these top two other ones are things to think through if you're married, or even for your kids or those around. If you're the one usually in a marriage or relationship, one person is more the financial person that manages the bills, and that another one's the more free spirit. Not all the time, but that can happen. So think through, if something were to happen to you, is your spouse going to be okay? Or if something happens to you, is your vice versa, is your spouse going to be okay, or are you going to be okay? So that's a key thing. We have some clients that, while one spouse is very capable of managing their investments, they can do all the research, they can manage it all, but they know if something happens to them, their spouse is not going to be okay. So they have us looped in to just help in case anything happens. We've seen some crazy situations where people didn't plan for that, and then we have a spouse in our office, you know, after a death or during the midst of something crazy, and we're trying to help them put the pieces back together. So just to think through that, and then in terms of that, do you also have documents put in place? And I'll talk through what documents are those in the next slide. So as you're thinking through getting some things ready for your estate planning, you obviously want to go see an elder law attorney or an estate planning lawyer. These guys are the experts. We can help give some advice, but you don't want us writing up your legal documents. So things to think through before you go see one of them is who's going to inherit your assets. So could be kids, could be spouse, could be charity. What proportion are you wanting that to go in? So if you think through that in advance, that can help. Also, this may not relate to as many of you, but could be for your kids. Who's going to take care of anybody that's dependent on you? So it could be your kids, could be somebody else that you're caring for, but who's going to help take care of them? That's a huge thing to think through. With that, how much money does it cost? And then also, as I mentioned before, who can take care of your assets if you're not able to? So do you have somebody that you trust that can help, you know, help you pay your bills or help do whatever? And then the last one, you can kind of see it's a little bit cut off, but who is responsible for if you pass away or when you pass away? Who's going to distribute out the assets and carry out your last wishes? So those are things to kind of think and brainstorm before you go see the attorney, because it's better to come in prepared instead of sit there trying to think through that and maybe rack up a large legal bill. So just a little hack there, I guess. So here's the documents. These are the really important documents you need to have. So everybody has a little sheet, a yellow sheet on their table you can take a look at that has these and more. And I'll kind of get into that, but some key documents you want to have. Honestly, everybody that's over 18 should have a chunk of these. The first two are powers of attorney. So a power of attorney, there's two kinds for a very good reason. The first one is a financial or a general power of attorney. So that's the kind of document that appoints who can take over your finances, paying bills, you know, could be added to bank accounts, whatever, who can help you with that part of your finances if you need, or help open accounts for you or whatnot. There's a lot of cool ways if you want to only give them so many, you know, the right to do so many things, you can kind of do that when you're talking with your attorney. The other one is medical power of attorney. So if you're not able to make medical decisions, you want somebody that can do that. And the reason these two are separate is because usually somebody that's really good with medical things is not necessarily always good with kind of the finances. Could be, but it's nice to have them separated. The next one is a will, or a last will and testament. These are good to have because it helps decide where does your property go when you pass. Who gets what? Maybe you have some antiques or family heirlooms you want passed down. It lets those go to a certain person. You could say who gets, you know, my car or house or whatnot. So having this is good. It also lets you designate who your executor is or your personal representative. So that's who can kind of follow through with getting your last wishes accomplished. And you want to designate somebody that you trust, of course. Trust is on there. Most people don't need a trust unless your wishes are extremely complicated. So we can always talk through that and we can say, hey, you might want to trust, or your attorney might help with that. But most people don't need that, in all honesty. Updated beneficiaries. This is something where you can add beneficiaries to your investment accounts. You can add them to a bank account, life insurance, all that jazz. You can add beneficiaries. So why do that? If you have you know, you might be like, oh, I have a will. Why do I need beneficiaries? You don't have to, but by adding beneficiaries, those that are going to receive your assets can do it way easier. It's going to be a lot quicker. So, and it's going to be less costly. If you don't do beneficiaries, it just goes through the will and it has to be filed with the probate court. And it just takes a little bit longer for that whole process to happen, a little bit more of a headache. So by adding beneficiaries, it just helps out those that you're leaving behind. Another one that I threw on there was passwords. It's not a bad idea to jot down passwords to important logins or sites that you have. Just have them somewhere. Obviously, lock them up. Don't leave them around. But you could jot those down, put them in your safe. You can also use, there's some online things you can use for keeping track of passwords. But personally, I kind of like the, old-fashioned jot it down, lock it up sort of thing. But that just allows, even if you're around but just can't access it, let somebody else get in if needed. So thinking through that, that's a lot of documents. And there's a lot more that are on that sheet, right? Like birth certificates, all sorts of other things. So where are you going to keep them? And that's what your powers of attorney or spouse or kids or everybody's going to be thinking too. Where are all these documents? And they don't want to have to rifle through everything and, have to go through. Maybe it's in this box, maybe it's here. So this right here, this is something we kind of created where you can write all the locations of where your documents are down here at the bottom, A, B, C, D, or E if it doesn't exist. Sometimes it's not applicable, but it's nice for that person to know, hey, this doesn't exist, don't bother looking for it. And then you can document where is it. So maybe A is at home in a safe. Maybe B is a safe deposit box at the bank. Maybe C is like your attorney and D is your financial advisor. And then you can locate, you can put things at different places. That's not a bad idea either. Because if something happens, like, God forbid, but your house burns down and your safe goes with it, shouldn't. But, say something like that happens, it's nice to have a backup somewhere else. Or say that you're, whoever's looking for this, like your executor or your heirs are looking for it, it's nice to have different places that they can find it. So something that we always offer, any of these documents, we always offer, we can take them, scan them into our system. We have so many layers of encryption and protection, but we're always happy to keep them so that if something happens, you can just send your heirs or whoever's managing your affairs over to Eldorado and we'll just get them what they need. Not a requirement though, just something we like to do to help. Ooh. Why is that? And this is really quick, this is just on the back of it. It's just a list of important contacts. So if something goes crazy, who do they get a hold of and for what? So you can filter that. You might not necessarily have something for every part, and that's okay. So another huge thing that we say a lot, but I'm a huge fan of it because I've seen the benefits of it, is when you're thinking through all this stuff, organizing and simplifying your life, especially as you age, but even myself, I like to keep things simple. I like to have them organized because it helps in so many ways. It helps you not lose things or forget about things. So when I think about that, where are your accounts? Do you have bank accounts at 5 different banks? If so, why is my first question. Sometimes there's a real reason, but most of the time, it could have been just the past. They were offering a deal to open an account and you just ended up with 5 accounts. So it's nice to maybe say, hey, let's move them, maybe consolidate to 2 or 1. So just kind of less things to keep track of, less account numbers, less risk of one of them getting hacked, and you not noticing it, right? Another thing I see is retirement accounts. So if you stop working at a job, which is happening more often, people are moving a lot of jobs, do you have old 401k plans or old retirement plans that you need to consolidate in? If you don't, you might forget about it. And it might only be a few $1,000s, but you worked for that few $1,000s and you don't want to lose it. So there's a crazy thing out in the world that I think there's like over $2 billion of forgotten 401ks. That people just moved on, they forgot about it. And so while you can always try to go back and claim it, if you don't know it was there, you might completely forget. So I'm a big fan of, if it makes sense, lump things together. Don't have a billion logins. Don't make your heirs go to a billion different places to, get their assets, all that jazz, but mostly so you don't forget about it. As I said, where's your documents? That locator's all about that. Help keep that organized. And then this is something we like to do, right? We have shred days. So go through your documents. Are there things you don't need anymore? Are there TD Ameritrade statements from 2005? Probably don't need them. So you can kind of go through your list of items and say, let me get rid of some papers that I just don't need. A good rule of thumb is usually keep things for 7 years for IRS purposes, but we're always happy to take things and shred it for you if you'd like. So going through that's going to be really helpful for your life, but also for anyone that you leave behind. This one, it's totally up to you. Sometimes going paperless is helpful because then you have less papers to sort through. But if you don't feel comfortable with that, that's A-okay. This other, kind of these last two ones, it's about, is your house organized? So not that you have to be, Marie Kondo or one of these people that are organizing gurus, but just, is it kind of tidy? If you have too much clutter, like somebody from an episode of The Hoarders, it could be hard to find things. You might fall, like it can cause tripping hazards, all sorts of things. So it's just a good thing to think through, is that organized? It'll also just help relieve a little bit of stress. And then kind of with that, does it make sense to downsize from your house? And that's just something to be mindful of in different stages. Do you need a huge house to take care of? Does it make sense to downsize? If you're thinking of downsizing, we recommend, plan for the future. Yes, you can live in whatever house, in 5 years, but where do you want to live? Is it a home that you would like to live in for the rest of your life, or is it something where it's just a stage? So be mindful of that. And if it is a longer term sort of move, think through what are you going to need in 5-10 years from now. So this is just something I put together. I kind of talked through a lot of the aspects, but if you have anybody that's going through a medical emergency or doesn't know, what to do when something like this is happening, I wrote a little ebook. It's not all that long. There's lots of pictures, but I put it up on the website, so if anybody needs it or needs walk through it, this can help walk you through kind of some of the things I was talking about. What documents do you need? What steps do you take if something's coming up? The kind of last slide that I have here about this is when thinking through possessions and who gets, where do you want things to go? Some things that you might want to do is, why wait until you've passed away to give some items? So if there's some cool family heirlooms that you're like, I want this to go to my daughter, I want this to go to my grandchild or whatnot, maybe it makes sense to give it to them now. The reason is you have the memory of giving it to them. You can share all the cool stories that go along with it. You get to watch them make memories of their own with this item or whatever item. So it's just something to think about. It doesn't mean you have to, but if there's anything you've been thinking about, might not be a bad idea to say, hey, let's get together. Let's share the stories and pass down the stories from any items, and then it just helps you have some nice memories. It also ensures that, if you wanted this to go to such and such person, if you give it to them, you're pretty sure it's going there because you gave it to them. And then just an added bonus, it helps you declutter, but it's more so on the memories. Oop. So thinking through this, all the things I said, that's a little bit of work to do, all those things, so why do it? It's all about, think of it as a gift. It's a gift to yourself, so you don't have to worry and be stressed out about all of the items that you have around. You don't have to think about it and have that be like, oh, I need to do that. That thing is a huge gift to your spouse, your kids, anybody that you're leaving behind or would be the decision maker if something is starting to happen to you. It's a huge gift to have this all in place, because I've seen it when it's not, and it's horrible. I've seen a lot of tears and help them through it, and I love helping people, but I would much rather you not have to be in this situation. So it's a huge blessing. So on that note, thinking through, how can you bless those around you? I just wanted to say, hey, thank you so much for coming today. On our tables, we have a little survey, and what this survey is intended to do, just to hear what you'd want to hear about in future talks. Any questions that you have, please feel free to jot them down so we can make sure we can address them. Sometimes it's easier in the moment when you're sitting here being like, oh yeah, that's a question I had. So feel free to jot that down. Any feedback, I'm happy to hear. So feel free to fill those out. You can just leave them on the tables and we'll pick them up. If you want us to get back to you with like a question, put your name. If you just want to jot down some feedback, you don't have to leave your name. So there's one other thing, but maybe not. Oh, I just wanted to throw this cute little picture because it has it has Charity's baby and my little guy, and they're of course not looking at the camera. But I just wanted to say thank you so much for your time today. If you have any questions, we'll be out and around, or you can swing by the office, give us a call, whatever. So thanks so much for coming, guys.